to HIMS. It's just been an impressive stock, as mentioned previously, 176% increase in the stock price. And it's really based on this growth rate. The company's been growing by leaps and bounds and really becoming a bigger company. Their free cash flow is there, which I'm going to use in my valuation, and look at their margins. So they're valued. I still think they're priced a little expensively. When we look at their valuation, I think they're about 12% overpriced. Analysts think they're 11% overpriced. So there you have it. It's like, yeah, they're a little bit overpriced, not outrageous, but a little overpriced, and the stock's really run up. So the question to me is, how are these guys able to sell weight loss drugs when Eli Lilly, spent so much money to get a patent and have these, this drug that's really popular? I think that these guys, HIMS, they are, they're not necessarily they're not working through the establishment, which is like Eli Lilly. You get a prescription from your doctor, you go to the pharmacy, you get that prescription filled, and you have your weight loss drug. Well, HIMS is like, no, we don't operate in that space. You come to us, you state that you're interested in the weight loss drug, you meet with one of our physicians, we recommend our treatment, and then you buy it. And then you're off to the races with buying HIMS. I believe it's a cash business. And I think, Kiter, did you have a question, or did somebody have a question? Maybe not. Okay.
I think Enkiter was just saying that he put a note that this is very popular on YouTube.
And when you say popular on YouTube, it's a popular stock on YouTube, or it's like, hey, people that are basically influenced to buy products on YouTube or TikTok or whatever it be, they're very popular in that marketplace. And I think you're probably going to say both, right? They're probably very popular on YouTube because this is kind of a new way of looking at things. I have to say that, I don't think it's fun to go to the doctor. I don't think it's fun to go to, okay, recommending the stock. Yeah, I agree. HIMS has been pretty popular, and hey, you can see why, right? It's up 176%. And that's with a pullback recently. So if they didn't have this pullback, it'd be like at 200%. So, but I think their business model is, I think, a better way, or I would say a better way for a certain population that doesn't like to go to the doctor, thinks it's a big pain in the neck to go through all these hoops, and then you have to go to a pharmacy, then you have to do this. So HIMS, what they do is they say, look, let's look at the top things that people want healthcare around, right? And then, or, maybe other premium products to take care of themselves, wellness, right? And they then, work to fill that particular demand. That's where I think they're really good. And it's certainly working if you look at their growth. The piece that I've always thought, these guys are one lawsuit away from really getting themselves into trouble. They haven't yet. How long have they been around? 2017. So they're a fairly young company. If we round up, they're about an 8-year company. And so they're doing they're doing this, pretty much. They kind of remind me of like Robinhood or like Airbnb or Uber, right? Which is, hey, there was these particular industries that had operated in a particular way for a long time, and along comes a company and says, no, we don't want to follow that rule set. We want to create our new rule set, which is more really centered around a part of the market that really wants to buy an experience and get services in a different way, like Uber. People use Uber because they don't like taxis, or they don't want to buy a car, they don't want to pay for parking in an expensive place, and so forth. So they take Uber. And I can go on with like Robinhood. Robinhood is not for everybody. I'm a Robinhood stockholder. I go on their platform. It's not for me. It's like very gamified, and my brain isn't put together that way. So these guys are probably going after a different part of the market that the Eli Lillys, the Johnson & Johnsons, they're kind of old school. They're going through the established, business models, and these guys are going a different way. And they're focusing on weight loss, male, or whatever you want to call this, hair. These are like topics that people want treatment on. So Any thoughts on HIMS? What you guys have thought about the stock over time? Is anybody an investor in HIMS right now?
I'm not currently an investor in HIMS, but I have owned it twice. Made good money both times.
Good.
I have one comment and input. Do you hear me?
Yeah.
Okay, so I know that in May approximately, I think that that's where you pointed that there was the drop, that the management was involved in some political debate around the pro-Palestinians demonstrations and riots, anti-Semitism and so on. So there was a bit of some issues there. I think that was more or less when it dropped for some time and then it recovered, as far as I remember.
Yeah, I mean, I've been, you know, the one thing that I like with healthcare, right? It's a space where I think if you do things wrong, you're going to be out of business. And that was my biggest concern with HIMS is if they're providing, you know, this stuff to customers, and I'm not sure that they provide treatments that are like life-threatening or not, like people that have cancer, they're not going to HIMS and saying, hey, I've got a specific type of cancer. What do you got for me? And they're like, oh, take these herbal supplements and stuff and you're going to be okay. They're not doing that. They're more like cosmetic, you know, weight loss and, you know, hair loss and male enhancement and all that stuff, which is kind of like well, it's not like life threatening. It's more like, you know, nice to have kind of healthcare. So that's been kind of like their playbook, which keeps them out of what my biggest concern was. Well, at some point, these guys are going to get themselves into trouble because this is an industry that, you know, if you have a couple of bad incidents, like, you know, you've had, you'll have lawsuits coming out of your ears, and it'll be like, oh my God, and the FDA will shut you down. So, so that is HIMS. It's been catching my attention on several points in time. I never, you know, kind of bought into the company. I was like, you know, this is a little too fluffy for me, but they've gotten it done. Awesome return. It's come back to earth a little bit, but it's still priced quite high. You know, not too long ago would have been a good buy at, I could call it $14 a share back in September, and then back in May 23. You know who's covered HIMS is Scott's Due Diligence. He's covered HIMS, and I wonder, let's do a quick search on this. 23% discount, or actually 15% discount, excuse me. And so that was pretty good advice, but it's not like popping out like, oh my God, this thing's like a really, really awesome stock. And now the market cap's above 5 billion. So it's really moved in the last 10 months, excuse me. But he was onto something. The cash flows weren't quite there, right? You got cash flows at 47, but now the trailing 12 months are at 161 million. So this one here is moving. It has momentum, but you got to really watch it close, because if they have one bad earnings, this thing can really drop in value quickly. Or if, let's say, I know that Eli Lilly and there might be other weight loss drug companies, they've started a movement to try to prevent other companies from infringing on their patents, like coming in and saying, well, we'll sell you the compounds that, you know, Eli Lilly would sell you. And if they infringe on those patents, let me tell you, Eli Lilly will come at them with everything they've got legally. We'll see if that happens. So that is HIMS. I thought it was interesting, and I wanted to cover it.